yen. Actually, let's do gold real quick. This is something that a good trading buddy of mine, Philip, brought to my attention this morning. Gold had a cipher here on the 4-hour chart, up at 1247.18. And I don't actively watch gold trade. I have some hard asset investments in gold, but did any of you guys catch this cipher yesterday? If not, there's a potential 2618 setting up. You can see on my chart, I have the double top up, one top, pull back, a retest of structure. It now looks like we're on the 4-hour candle or 4-hour chart, so you have to wait until 9 o'clock. But it looks like we're going to get a break and close below that structure level. If we do get a break and close below that level, then you can start eyeing up for a 2618 opportunity. Right? Is anyone not familiar with the 26? And Carol says, missed the cipher but gotten double top. That's perfect, Carol. That's perfect. And this is why we teach different techniques on how to break down the market. We're not going to see every pattern formation. We're not going to see every opportunity. So when you're knowledgeable about stuff like double tops or 2618s, what it does is give you more chances. You know, Carol's a good example. Hey, missed the cipher formation, but if price action comes up and gives me a double top, RSI overbought, RSI divergence on the retest, then I'll enter double top, right, as a secondary chance or even a more conservative way to get involved in this trade. If you missed the cipher formation entry, if you missed the double top, well, do you just run away and hide? Do you cry and scream about how you stink as a trader because you missed it? No, you reset. You say, hey, trader, insert your name there. Is there another opportunity for me to get involved? And we have one more trick up our sleeve, and that would be the 2618. And again, the 2618 is essentially an alternate way or a more conservative way to enter a double top. So if price action breaks and closes below, you can wait for the retest back to that 618 and look for a chance to take it short. All right, Euro Yen 15-minute chart. Again, typically we start on the daily chart and work our way down. But I have a bad habit of teaching and missing opportunities. Again, if you're going to be in trading education, your personal trading is going to get hurt. So I do want to take advantage of this opportunity. Do you guys see what I'm seeing? If so, type it in. Cipher. Double, not a double bottom. We can call it a retest of structure, so a trend continuation trade, but not a double bottom. Yep, trend continuation trade or cipher. Two things here. One will be a trend continuation trade, and I'll show you my bigger perspective of the euro later, and it'll kind of make sense. But let's start off by analyzing the cipher. This is going to be my X leg right down here, right? X, my starting point. Swing low to swing high. X to A. All right. What do I need for my B leg, guys? Fibonacci retracement, X to A leg. What do I need for my B? I require feedback in this room. So if you're scared, if you're nervous about typing in the wrong answer, if you're that kid that's sitting in the classroom where the teacher calls on you and you're like, this isn't the place for you. We have a great community, guys. Never be afraid to be wrong. It's not a trading forum. We're not going to tear you up and make you feel bad. All right. Yep, we need at least a 382 retracement, right? We touched the 618. Is this going to be a problem? We tickle the 618. Is that going to be a problem? No, it's not. Remember, cipher B leg, valid until we close. So let's just get this on here. Let's bring in our Fibonacci extension tool. Get my crosshairs here. There we go. We do hit our 127. Let's clean this up a little bit. And we know we're looking for our 786 for entry. So we're looking at potential bullish cipher formation, X to A to B. I'm too lazy to draw out the rest of the letters. B to C, C to D right down here at 122 even, right? Anything special about that number? I'll say it again, 122 even. Round number, even handle number, psychological number. For you guys that may be new, we call these even handle numbers. Numbers high psychological numbers, numbers that end in 0, 0, numbers, really anything that ends in a 0 or a 5 is a high psychological number. More so numbers that are easily picked out by us. So 122 flat, 122.50. Numbers that, think back to when you were a rookie trader, that you would easily put stops at just because they sound good, right? Very easy for us to divide stuff by 5s and 10. So we tend to put stop losses and stuff at numbers like that. Oh, 123 even sounds good. Let's put it there. The market will often react off those levels very similarly to how it does with support and resistance. So let's get my orders on here. 122 even, or 122.02, front run by 2 pips. We got a 10 pip ATR here. So whether you're taking an ATR stop or a 10 pip stop, looks like stop loss is going to be the same, about 121.71. Looks like that's going to line up right with a 113 as well for you guys that use that technique. All right, so let's look at Euro Yen. Live room members, you remember we talked about this last week. What did we say this was here? What type of formation was this, guys? Yep, descending triangle, descending triangle. We talked a little bit about the psychology of this. We had a couple traders that were looking to buy. I said, for me, this is actually a selling setup because of how I look at the market. Again, we picture this level being like a door, right? Being like a door. I don't know why I'm going to use this now, to being like a door. And let's say, well, let's walk you through this one more time. Market falls down, right? We start to rise back up. This means what? What does this tell us? What does this tell us? Think, I want you to think differently. I'm going to challenge you to think a little bit differently. What does this tell us? Who's in control down here? What type of pressure are we seeing? Buying or selling pressure? Easy answer, right? Not necessarily more bulls, but the buying pressure, right? Buying pressure, right? Bulls push it all the way up, right? Maybe tug of war is a better example. Bulls push it all the way up. Bears seize control once again. They push it all the way down to that same level. Then boom. Halt. The buyers are there again. What did the buyers say? Not so fast, bears. Not so fast, bears. Right? We're going to protect this level, right? Do you guys see this, right? Structure, previous structure support, holding. Give me a yes. They're going to protect this level. Right? Bulls push it up again. Again, imagine tug of war. They're both pulling on the rope. Now, what do you notice here in comparison to here? Charles, we should be charging thousands for this, Charles. Lower high. What does this tell you? This is the Euro Yen on the daily chart. What does this tell you? The bulls pushed back, but they weren't able to get as far, right? They weren't able to get as far. Yeah. So what happens again? Bears push down again. Boom. Once again, the bulls. Pow. Force field. Stop them. Bulls try to push back again. Once again. Not as far. So this is what's happening. Each time the bulls are pushing back, right? They're pushing back smaller and smaller and smaller. Right? They're using the same amount of effort to hold this level, but they're pushing back smaller and smaller and smaller. Now, let me ask you guys this, right? Have you ever done anything where you've given a lot of effort and the results are less and less each time you do it? What do you eventually do? If you're doing the same thing and each time you're getting less and less results, you got a hammer you got a nail you're trying to hammer into the wall, right? And you're banging it, and it's just like you're just not getting it. What do? You give up. And you say, you know what, I'm going to try again another day. And this is what we expect from these type of patterns. We expect the bulls to finally say, you know what, whatever. Not worth it, next time. And that's why we see these breakouts to the downside. Buy a bigger hammer. There we go. Good answer. Good answer. And that's why we see these breakouts to the downside. So we had a little bit of a break here, right? Not a massive breakout. There is room to go lower here. And I hope my charts aren't, I've got a lot running right now because I'm recording this. I hope my charts are clear to you guys. We do have room to go lower. Our next level of previous structure support is not going to be until down here, probably about the 120 even handle. And get another psychological number, maybe even a little lower than that. But 120 even handle. So we have room to break out to the downside. And there are different ways to trade breakouts. You can trade them aggressively, kind of like the favorable excursion deal that we've got for you in the training, the syndicate training. You can trade to retest, right? And if you're someone that trades to retest, that's what I would be looking for here. You got to break and close to the downside, right? IPDE, identify, predict, decide, execute. Break and close below tells us what? IPDE. Break and close below tells us what? I know, I'm sorry. I'm throwing you guys right into the gauntlet, but I told you I was excited about this week. I'm so excited, right? Lower, low, low. Yeah, bearish continuation. Bearish continuation. So we identify the market has broken and closed below previous level of structure, right? So we would expect a continuation to the bearish side, right? Phil's already one step ahead of me. What's our prediction? That the market will go lower. Now, you guys know what you know the little twist I like to put in here, right? There's two parts of that prediction. Two parts of the prediction. Phil got the first one. Where is the market likely to go? And the second one is what? How is the market likely to get there? And there's typically two ways the market will do this, right? The first way is simple. It'll just go straight down, right? It'll go straight down, or we'll see a retracement before going straight down, kind of like a trend continuation move, all right? Are you guys still with me here? Good. If you're not, it gets easier. It gets easier. But this is just the basics of how to read a price chart. New structure high, new structure low principles. Now, we do this, or I do this on a daily chart, because what I want to do is I want to form a confirmation bias. And I mean that in a positive way. Confirmation bias could be positive or negative. It's an example of a negative confirmation bias would be something like listening to the news, listening to all the pundits talk about Janet Yellen's speech and saying, well, she said there's still a chance that, we can stick to our same interest rate plan. So we should all get long the dollar. We should all get long the dollar. And you change the channel. We should all get long the dollar. And then you come into the market with, all those people in your ear saying, okay, I got to get long the dollar. I got to get long the dollar. So automatically you only look for long opportunities. That would be a bad example of a confirmation bias. Or even something like, say, Charles shares a setup on Facebook where he's like, hey guys, just got short euro yen. You're like, oh, Charles is the man. So I guess I should only look to get short euro yen. Something like that. A good confirmation bias is using your analysis, using your principles of new structure high, new structure low, how to read a price chart. And when we do that IPDE, we've already come to the conclusion. You guys have told me that, right? Your prediction is that we're going to continue lower. Am I correct in saying that? Yeah. So when looking from a swing trader perspective, because, we do swing trading and day trading here in the live room. When looking from a swing trader's perspective, you should only be looking for short opportunities. And what that does is eliminates half the battle, because we know how it is. You look at a price chart and you've got the two little people standing on your shoulder and one's in your ear, like, hey, you should get long. This is why you should get long. The other one's tapping you like, no, get short. And then your mind's all over the place. You're like, long, short, long. What do I do? And then you get that paralysis by analysis thing, right? Have you guys ever been there? Paralysis by analysis, where you draw on so many things on the chart that you have no idea what to do by the time you're done. Spend like 3 hours analyzing a chart. You've got 50 trend lines and pivot points and moving averages and indicators, and they're all telling you different stories, and you're sitting there like, I don't know what to do. Right? We want to eliminate that. We want to choose what side of the market we want to be on. In this case, I want to be short. All right. So that's what I use my higher time frame for. It's a long way of saying that. I want to be short, right? For my swing trading. I would. I think it's a good opportunity for you. If you're a very aggressive trader, I think it's a good opportunity to get short right now. You've got a very good risk reward. However, not everyone is aggressive. And let's just do a little poll real quick. An instant poll. What type of trader are you? Aggressive? Conservative? Conservative? Very conservative. But yeah, I do think that was a good level to get short if you're an aggressive trader, because if you're not an aggressive trader, you wouldn't have had a reason for entry. For those traders who are more on the conservative side, again, identify, predict, you decide, you're asking yourself, what do I need at this level to enter? For a CTS trader, you may need RSI overbought, you may need a double top, you may need a lower low, lower close, some type of more conservative entry reason. And at this point, you haven't got that. So for a conservative trader, guess what? You just never you never received an entry reason. Not yet. You could, but you haven't received the entry reason yet. So although this is a good opportunity, although you spent all that time doing your analysis, guess what? The market just didn't give you a reason to get short. And that's okay. Do you guys understand that? That's okay. Because there are pros and cons of being aggressive and conservative. Let's say this thing comes right down, right? Aggressive traders doing backflips, right? Doing the money dance, making it rain, right? Shouting out the window. But what's the downside of being aggressive? This is the positive side. What's the downside? Because there's a pro and con to everything. There's a give and take. What's the downside? What if we just do this? Right? If we just do this, what happens? Aggressive traders, what did they just do? They just lost some money. Conservative traders looking for that conservative reason for entry, you never got involved. So guess what you did here? Did you lose anything? No. Now it's important because many of you want the best of both worlds. And guess what? There is none. There's a give and a take to everything. Everything that's positive has its negative, right? And I think one of the best things you can do as a trader is accept that and understand that. You're never going to win everywhere. Some of you want to be aggressive when it works, but then you want to be conservative when it doesn't work. Guess what? Market doesn't work like that. Unless you're looking in hindsight. It works like that in hindsight. We get a lot of that. We get a lot of traders looking at charts in hindsight and be like, oh man, yeah, I would have been conservative here because it worked out this time. Oh, I would have been aggressive here because it worked out this time. Guess what? In real life trading, you see this over here? What is this? This is open white space. This means we have no idea what's going to happen. And as we talked about in yesterday's Q&A, the market has a habit of doing whatever it wants whenever it wants to. I'm telling you, we had some fun with it yesterday. But no matter how hard we tried, the market's not going to whisper in your ear and say, hey, Ian, I'm about to get short in about 5 minutes. So get your order ready. Market's not going to do that. Market's not going to tap you on the shoulder and say, hey, Phil, you probably want to be a little conservative this time because I plan on breaking out to the upside in about a couple minutes. All right. I plan on breaking out to the upside, so you probably want to be conservative with your entry. Right. Market's not going to do that. It does what it wants when it wants. The best thing that you can do as a trader is match your trading style. This is something we work with our transformation members on a lot. Match your trading style to your personality. If you're a naturally aggressive person, you're probably going to be okay trading an aggressive trading style. Because it's probably going to bother you to wait and to have patience, to wait for confirmation. It's probably going to bother you to do that. If you're a naturally conservative person, you look both ways before crossing the street, you're probably not going to do well trading aggressively. Because in the back of your mind, whenever you take that aggressive entry, you're going to be like, well, I probably should have waited for confirmation. And that's how you end up making psychological mistakes. So this is a short entry right here, or a potential short trade for you guys, swing traders. The next opportunity would be up at our higher level of structure. So we can kind of do what we did with Euro Pound the last week. If you want, let's say the market does break out to the upside. We can take a Fibonacci extension tool, invert it. You can look for that 1618 inversion right up there at 123.78, and start building a case for entry that way as well. Let me just see what we have here. 50%. You'll have an 886 up there as well. You never know. We may end up getting a pattern formation. Market may spike down a little bit like that. May end up coming up here like that. Now you've got yourself a potential bearish bat formation. So don't think we need to worry about that so much or too much right now. We'll wait and see what the market does. But we always do want to stay one step ahead of the market. Let's go down to our 1 hour chart. What pair do we want to take a look at? What do I have on my radar? Let's go over to, someone mentioned dollar yen. Let's do dollar yen next. We have a few traders in the live room that are still short dollar yen. They got involved at the very top right here. If you guys remember a few weeks ago, we had this pretty nice breakout there, made some money, and then a couple traders caught it short down here. Now, dollar yen, we're in a trend continuation mode. I guess let's go through our thing. Identify, predict, decide, execute. Identify. Is the market bullish or bearish? What do you guys think? There we go. Easy way to tell. If price action is going from the left corner to the right corner, top left to bottom right, we're bearish. If it's going from bottom left to top right, we're bullish. That's an easy trick learned over hundreds and hundreds of hours trading. But we're bearish. So we're still in a trend continuation mode here. We came down to previous structure lows. So this is going to be kind of one of those decision points where, especially if we see a break and close below these lows right here, 105.50s, we can expect continued bearish movement. I still think we could dip lower, but we have come down to previous structure support. So let's see what this bad boy looks like. Let's get a different price chart. Let's see what this bad boy looks like on a 4 hour. USD JPY 240. Chris says daily butterfly on the daily butterfly. Setting up, yeah. Got the B leg going for you, Chris. Yep. Let's take a look. Let's get Constellation off of here real quick. I like my clean, naked-like charts. 240 chart. You can see our DSR level here. Let's just reload this to make sure these gaps get closed. Remy says there was a bullish Gartley 1 hour filled a few hours ago. Just reached target 1. Well done. I think that's the same one we looked at on the 15. Good stuff. Where's my yeah. Well done, Remy. Well done. Do some of this too for following the rules.
Hey, good job.
All right. So you can see we could still push lower into our DSR level. We got an even handle number here as well, 106 even. We have room to go a little bit lower. So I would still be looking, swing trading wise, I would still be looking to get short here on the dollar yen. Now, where I'm looking to get short, I would be eyeing up this level right in here, right? Can you guys guess why? Why this level? Two reasons. I only came here for two reasons. Name that song. Just looking at previous structure. Again, if we go, my eyes can kind of read this already, but I always advise going through the charts and just do something like this, right? Measure out these ebbs and flows in price action. Measure out these ebbs and flows and see where price action ran into trouble at. You can see we come up here, came down here, little retracement, came down here, little retracement, right? We got some previous structure or previous support, which is now resistance right in this level. We also have this big black candle. This is what stands out to me about this level, this massive candle, right? So the market consolidates, and then boom, we break out from this level. This is probably a non-farm candle, but this is where the previous breakout came to. So if price action returned to this level, I would expect the bears to say, hey, this is a level where we'd probably be interested in getting involved at once again. So I would be looking for a move up to really that 109 even handle, a little bit before that, 108.50s to 109 for a chance to get short here on dollar yen. And again, you can kind of see, we go down, you can kind of see the little consolidation here. We come here, up, play around for a little bit, and then we break out. So I'd be looking for a move up to this previous level of structure for a chance to get short. Really the same type of trend continuation move as we looked at on Euro Yen, except we don't have that break on the daily. Now the next question is, how can I get involved there? Let's see. Let's bring over, for you guys that are CTS traders, let's bring over a few things. Let's put in a harmonic move here. A one-to-one measured move, I should say. That's going to put us at 108.06. It's not going to quite get us to that level. May have some. Nope. We're going to get 1414, 1618 Fibonacci confluence, but we're not quite at the level I want to get involved at. I think, Jason, you're looking at this, right, for a Fibonacci inversion trade? If I'm not mistaken. Greystone, if you're here. I think Greystone was looking at this morning. A level right here. You can see we have our 1414 at 108.05. We got a 1618 inversion at 108 flat, right with an ABCD pattern completion as well. So if you're building a case for this, you can start going through your CTS score. It looks like we'll get a 618 Fibonacci retracement too. Come on. Give it to me. Whoo, he's so good. Look at that. Nailed it. That's 2 for 2 today. Oh, yeah. So you've got Fibonacci confluence. You've got a 1414 extension and 1618 inversion. You've got a 618 Fibonacci retracement, all at that same level. You got the 108 even handle. You also have a potential ABCD pattern completion. Previous structure also, let's see. I'm not going to look at this as previous structure. You do back here. You do back here. You're right. Is this what you're looking at? Okay. I'll tell you what. For me personally, and this is a just personal thing. Obviously, everything's personal. This structure right here, recent structure is always going to be more important than past structure. So although this is a nice level of structure, the way I trade, I would prefer price action to get up to this structure level. Mainly because this gives me a place to put stops, a much better place to put stops. If I get involved right here, I've got to put stops above our previous outside of return, at least up here, which is going to give me not the best risk reward. Not a bad one. It'll give me a 1-to-1, but not the best risk reward. I would prefer, and again, if you do a conservative entry, you can suck that down a lot. I would prefer something more like this. But that's just a personal preference of mine. So let's head down to our 15-minute chart. Again, swing traders, 2 opportunities. You have basically a level where you can start adding up your CTS score and deciding how you want to enter right here, whether it's aggressive or conservative. That's going to depend on where your stop loss goes as well. Or you can look for the higher level up here. But yeah, I always personally value more recent structure than past structure. Unless it's like an all-time high or low, and that's important. Let's head down to our day trading time frames. We will take our first break in a little bit, guys. I promise. I just want to get through this pair. Where can I get your advanced pattern record? The software? The Constellation software? Is that what you mean? Oh, just go to tradingpower.com and click on, what would it be? Products and services. And it should be, yep, there you go. Constellation right here. Just click learn more, and it'll give you some
Hey there, everybody.
videos and get your copy today. Yep. So tradingpower.com, click products and services, and it's right there. All right. Let's go down to our 15-minute chart here on dollar yen. Ooh, just missed a nice, I'll tell you what. We're going to have, looks like a potential cipher formation here as well as an at-market bat formation. But I don't think the at-market bat is going to give us enough pips to make it worth our while. So there's a potential cipher here. Very similar to Euro Yen. X to A to B. B to C right here, technically. C to D down at 107.06. We can keep an eye on that. If we go down to the 5 or maybe even the range bar chart. Oh, darn it. Dollar yen, not Euro yen. We may have a bat formation here at market as well. I'm just not sure if it's going to be enough pips. Now, it depends on your rules for your C retracement. We hit a 50%, so if you require a 618 retracement, this is going to be invalid. But we've got a bat looking like this. X to A to B. Let's make this a different color. Gold. I like gold. X to A to B. B to C. C to D would have been right here at 107.54. Let's just see if this is... feel free to take away. Let's see if it's enough for me to take here. 107.52 to about 107.65. Yes, there's only about 10. There's less than 10 pips of profit here. Not worth it for me. It's not a big enough profit potential for me to put my money at risk for. But you have an at-market bat formation for those looking to get long at this level. All right. Any questions before we take our first break? Hey, Sarah. You missed everything cool. Is it a valid? Is that A to B? Is the C leg valid for the cipher? It comes up to the 127, but doesn't close above it. Yeah, it doesn't. There's not. You don't have to close above the 127. Is there a reason why you only take one target? I take 2 targets personally. I take 1 target for our Syndicate program, mainly because it causes a lot less confusion. What we've noticed in the past when we first started running the Syndicate years ago is, we would take multiple targets, and then, we'd update Syndicate members and we'd say, hey, half position off, stops rolled to here, targets adjusted, second half position off here. And because the Syndicate works as kind of like an entry-level program where a lot of new traders are coming in, we basically had a lot of people that got really confused by position management and taking multiple targets. And it gets kind of frustrating getting emails every single day about people and explaining the same thing over and over again. So what we decided to do was just make the program as simple as possible. That's why we only take a handful of trades. Jason only takes, I think, 2 type of trades. I mainly just shoot in advanced pattern trades, and we take 1 target just to make it simple. Say, hey, we're in here, we're out here. Personally, I like taking multiple targets. I think that's the more profitable way to trade, in my opinion. But again, for that program, we just try to keep it as simple as possible. Does that make sense? I would personally advise testing multiple position or multiple targets and seeing how it compares to taking one. If you catch my drift. Now, taking one target makes life a lot easier. I'll give you that. So if you guys have trouble managing trades, it makes life a lot easier. But pure profitability wise, I would encourage that you test multiple ones. In the meantime, let's look at this potential bat formation here. We've got an X leg starting right here. Yeah. Oh, not going to be a bat formation. It's going to be a Gartley formation. We have an X to A, swing low to swing high, right? A to B right here. B leg comes past our 618. 618 takes us away from our bat formation, puts us on Gartley alert. And we're looking for a D completion down at our 127 extension. Or we can just do this. Let's see if this works. I like being lazy. Oh, I don't know. No, not that one. Not that one. Yeah, there we go. Look at that. Constellation. Doing it for me. So potential Gartley formation at 155.28. We know that I have a nickname for the pound yen. I call it the graveyard, because it has a massive ATR, and back in the day when I used to stink at trading, this used to be the pair that used to blow my account consistently because the ATR was so big. So it is going to mean big stops and big targets. Targets, you're looking at a move from 155.28 up to our 382. So about 100 pips target, 100 pips of target, which means there's also going to be a rather large risk. So one thing with the pound yen and Euro Aussies and pound Aussies, pairs that have rather large ATRs, you want to make sure this fits into your risk profile, meaning that your stop loss is small enough for you to take the trade. Now, this has a 73 pip stop, which is within my zone, so I can take it. If you can't afford to risk 73 pips, if that's outside of your average risk, is what I'm saying is, you may either want to pass on a trade or look to enter at a lower point. But let's look at Bull Gartley formation at 155.28. Let's give it some time. It loads up perfectly until I have to do it in the live room. There we go. So for you guys that are looking for trend continuation opportunities, we may see one here. Let's 24, hold on. 17. Let's see something real quick. 25. 6, 7. No, we'll do this right here. I'm gonna get short right here on pound yen. It's gonna be an aggressive trade. You don't see me do this too often, but come on. Let's get a little bit up because I have a big spread on here. Come on, come back up. Here's what I'm looking for. I'll keep an eye on this. It's gonna take the lower low, lower close entry right here at 156.48. I'd like to get up to about 156.53 because I have a rather large spread. I have about a 5 pip spread here on pound yen. But here's what I'm looking at, right? We're looking at overall price action, right? Our previous level of structure, or our next level of structure is down here, right? Would you guys agree? Here's our next level of structure. Yeah, the main focus is on Forex. Not options or futures. You can use the skill to read a price chart no matter what, but stuff like options, you probably want a specific course on options for that. But previous level of support is down here. This is where I would expect the market would pull back to. This is also the B leg of that pattern. And if you see, if we do our week one stuff of just reading a price chart, we've got new structure low, outside return, new structure low, outside return, blah, blah, blah. We're coming right back into this previous level of structure right here. And what I was going to do is, before we got too far away, I was going to get short at market in anticipation that price action was going to come down here. Unfortunately, price action, my stop's going to be at 156.67. Unfortunately, I was a little late to the party. But essentially, this is an aggressive trend continuation trade. Market pulls back in the previous structure looking left. If you want to get fancy, I didn't draw this on, but you can do something like this. Fibonacci inversion, swing low to swing high backwards. We should get a 1618 inversion up there. Boom, right on it. Aggressive trend continuation trade, expecting price action to retest previous structure lows. So unfortunately, didn't get a chance to enter the trade. This just proves once again what I talked about before. I don't think I mentioned it today, but if you're going to be a day trader, you want to trade a small portfolio. You know why? Because you need to keep your eyes on this stuff. You don't want to have too many missed opportunities. If you're going to be a day trader and trade 12 pairs, guess what? You're going to miss a lot of opportunities. Whenever I get asked about how many pairs I would trade, and if I were strictly a day trader, it would be 4 to 6. 6 would be the max. So not going to get the opportunity here. Just barely missed it. But good example of a trend continuation trade nonetheless. And this is, we had a few transformation members asking about the difference between trend continuation and CTS. And I was talking to them about how if you're going to be a true trend continuation trader, you probably don't want to use that CTS system because you're only going to be able to get entered in very, very conservative entries. True trend continuation trading. There we go. Say that 5 times fast. True trend continuation trading. You're just waiting for that pullback and you're getting involved. So, but another benefit of the range bar chart as well. It just stinks that I missed it. But such is life. Such is life. Chris, look at that range bar chart. You got a little hidden butterfly formation in here. I know you like your butterflies. What else can we put in here, guys? If we want to make a projection. Here's your butterfly right there. Oh, sorry, I forgot to scroll the chat down. You guys have been talking. Sorry about that. Yep, ABCD pattern. Here's the thing. Here's what I like about the range bar charts, right? You see this right here? This is that big spike where it looks all big and nasty and disgusting and it hurts your analysis here on the 5-minute chart. You go down to the range bar chart and it's a lot smoother. It's a lot smoother here. It's a lot smoother. So if you wanted to make a projection here, you could do a few things. You can, let's delete this. You could put in an ABCD pattern. So 1-to-1 measured move, swing low to swing high. Boom. That's going to put you right here. You can also bring in your Fibonacci extension tool. That should give you a 1618 Fibonacci extension up there. There you go, Fibonacci extension. Oh, that's a horrible color. I'm sorry for that. Sky blue was a bad idea, Akil. Let's do green. 1618 Fibonacci extension here. Kenny's seeing a bat formation. Looking like this. And you know what? That's not bad at all. Yeah, let's do this. Yeah, that's not bad. I didn't even notice that, Kenny. Thank you. Let's go. Let's get short at market here. Pound dollar. So short at, what am I, 145.90. Let's get stops above our highs, 96. Let's go 146.06 right here. And I'm actually going to do this as a trend continuation, the opposite direction. So I'm going to look for a move back down to our previous structure lows here at 145.45s. So advanced pattern formation, but using it as a trend continuation type setup here. We saw the market go like this. Trend continuation setup to the downside, I should say. See the market double top up here, break and close below. What does this look like right here, guys? $145.90. 26.18. Right? We then put in a move like that. We have our series of new structure low, outside return, new structure low. Essentially, we put in a complex pullback. Oh, let's get this up here, actually. What is this? 07? Let's get this up to 11. There we go. Putting the complex pullback back into our previous outside return. We'll look to see if we can get continuation to the downside here. So, and Lax just got his second target set. Now that Lax has this big chunk of change out the market, maybe it'll free up some space for me to get short. So, one trade for the day. Let's get this into our syndicate. A good example. This is one of those trades, guys, where it's hard to explain for you just through the chat form, which is why it's awesome to be in the live room. You can actually see the thought process going through this. In the chat, I shoot you guys a chart of it, but it's just not the same. But let's take our break. Chris says, what would be the time frame? What would the time frame be in the 5 range? The closest, it would be similar to a 5 minute. Not exactly the same. It would be similar to a 5 minute, 5 or 15 minute, depending on the pair. But usually 5 would be similar to 5 or 8 range would be similar to like a 5 or a 15 minute chart on most pairs. But well done, Nuno, on the work done. Nuno was talking a little bit about his back testing of the 2618, and again, that's what goes into becoming a successful trader. It's not picking up a super secret strategy and just trading it right away. Again, if it was that easy, we wouldn't have a 90% fail rate in trading. It takes work. It takes time, it takes work, it takes a lot of effort. And for those who are willing to put in the time, work, and effort, they reap the benefits. For those who want to rush through it, again, myself, after I went through my training, for those who want to rush through it, you're going to struggle. And unfortunately, that's the truth of trading. Most people in general, not even just in anything in the world, and not trading, they're not willing to work for something. So we'll see it. Real quick, you can see one position here on the $5, not the $5, the pound dollar 5 range bar chart. I do have a second position waiting a little bit lower. We talked about this earlier on the minute chart. I'll draw it back on. If you remember, we have an advanced pattern formation, a potential advanced pattern formation looking like this. X to A, A to B, B to C, C to D. Do you guys remember this? I don't want to look at this. Do you guys remember this from the 5 minute chart? Give me a yes if you do. All right. Obviously not in the syndicate account because we only take one target. My second targets in my personal account are waiting right down here at the 886, where I'm going to do what's called a stop and reverse. Is anyone unfamiliar with what a stop and reverse is? If you're unfamiliar, type in a yes with a stop and reverse. All right, a stop and reverse would mean this. You're not going to see it here on this because, again, we're taking one in, one out. But, yeah, exactly. You stop yourself out of your current position and you go long the opposite position. So right now I'm short 2 units, right? If I'm taking target 1 off here, if I'm taking half my position off right here, this means I would have to buy how many? If I'm short 2, if I want to take targets off, I want to take half my position off, I need to buy 1, right? So I need to buy 1 right here, right? And that's going to leave me with how much of a position on? That's going to leave me with 1 position on, right? Now, instead of buying 1, which I would normally do to liquidate myself from the rest of my position, I'm going to buy 3. And when I buy 3 down here, here's what's going to happen. When I buy 3 down here, it's going to take me out of the 1 remaining position I have on for my short, and it's going to put me in a 2 unit position long at the bat formation. Does that make sense? So I'm buying myself out. I'm buying myself out of profit from the short position, and I'm putting myself in 2 positions long. Look, I told you. Look, when Lax takes profit, the market rolls over. You just gotta wait for Lax to get his smart money out the market. Did I kill my water? Unfortunately, Euro Yen's not going our way. But all right, we have boom, winner chicken dinner. Nice trade. Stops move to break even. Let me just do that on my other machine. Give me a second. Break even 45.08. I'm gonna keep targets down there. I'm not gonna do a stop and reverse because this is still a day trading pair. So I'm not allowed to take day trades after 11 o'clock. So we'll keep an eye on it, but I don't think we're gonna get. I would hope we get down there before 11. That'd be good. But if we don't get filled down there by 11, those orders are coming off. All right, cool. There we go. Good trade. You guys got to witness something pretty cool. Good stuff on there. 75 flat is right here. We're gonna have some structure. You can see looking left right here. If I were to bring some DSR levels, we'll probably get a daily DSR up there. Dynamic support and resistance. You can see some previous level support right there. We've got a little minor level of resistance right here. I think it's worth a shot. If we do end up getting an opportunity up here, I'd be looking for a retested structure down here. So basically this 100 pip zone, a move from 75 cents to 74 cent here is what I would be looking for on Aussie dollar. Certainly, if you can get a good entry, certainly worth the risk. Do you guys see why I would be shooting for this area? Do you see why I would be shooting for 74? And again, before you ever enter a trade, you want to think about, or not want to think about, you need to know entry stops and targets. If you don't know entry stops and targets, how do you know if the trade's a good trade to take or not? I just got a message on TradingView during the break. Was like, hey, Akil, where do I put stops on the dollar Canada? And I'm like, well, if you're in the trade, you should exit immediately. If you don't, you should. There should never be a question if you're in a trade of where stops should go. Why did you enter the trade if you don't have stops on? I know we shouldn't get frustrated at people like that because many don't know. It's not a. It's just an misunderstanding type of deal. But it's like don't enter a trade without protection. There's a lot of things you shouldn't do without protection, and one of those things is enter a trade.
Holy cow!
Oh yeah, he went there. Oh yeah, he went there. Insert, little teenage giggle, teenage snicker, right? So yeah, you want to know entries, targets, and stops for everything. SET, stops, entries, targets, right? We know that stops need to be where. If I'm going to enter a trade at previous structure, where do stops need to be? And guys, I was talking about cleaning your bathroom. We had to clean the bathroom the other day, so we bought some new gloves because we were using a lot of chemicals and we didn't want to get our hands affected with the chemicals. So you always want to wear protection for that. What were you guys thinking? Oh man, you guys are horrible. Shame on you. Get your mind out the gutter, guys. Get your minds out the gutter. Talking about cleaning stuff. Stop. We're almost done here. Stops above previous structure highs, right? So you know where stops need to go, right? You know where targets need to go. Now you can set up your orders, right? You can say, hey, if I were to enter right here at 75 flat, right? What is my risk? Boom. What is my reward, right? Boom. Does that meet my rules? If I were to enter lower here, how does that affect my risk? How does that affect my reward? Boom. I know, hey, I can enter this low or this high. You can start setting up your trade in advance. So let's go down to the 60 real quick. We're going to end things after this. I've got a bike ride that I want to go on that I got to get ready for. before a meeting. Some of you guys like my real estate stuff. I got a real estate meeting a little bit later too. So I'm trying to sneak in a workout before that. But yeah, Aussie dollar, this is certainly something that we want to watch going on to the week. We're not going to get anything here day trading wise, but this previous level of structure, really from right here, 74.50s to 75.17 is what we want to keep an eye on. Has anyone tested trend continuation? I feel there are so many variables in the way of being consistent. Yeah, it's kind of like the CTS. It's up to the trader, and that's why we see many newer traders flock to advanced pattern formations, because the rules are black and white. They're cut and dry. It's, hey, if 618 is hit, then expect Gartley. Decompletion at 127 every time. Where there's a lot more subjectivity in trend continuation trades. People are going to have different entries. Some like to enter at a retest of resistance. Some like to enter at the retest of the previous structure low. Some like to enter, say, like Lax at a 382. There's so many different ways you can do it. And typically traders that I work with, I should say, typically after here's what typically happens, I guess you can say. Traders come to the course. They learn all the stuff we have to teach, right? They learn the foundational elements. They learn some strategies, trend continuation, CTS trading, all that stuff, or advanced pattern trading. They start off by trading advanced patterns because it's the easiest for them to pick up and start doing right away. It holds them accountable because the rules are so black and white, right? As they trade advanced pattern formations, and hopefully they're being consistently profitable doing so, they start to get more experience in the market. They start to recognize structure and different type of counter trend or trend continuation opportunities. And they start to find their niche for what they need to look for in those situations. And eventually, again, as they're making profit trading advanced pattern formations, hopefully, they start adding those other type of strategies to their trading plan. That's what you typically see happen. But it's definitely more of a feel because it's not going to be the same for everyone.